Nike is one of the most recognizable brands in the world, and when you have social media icons and influencers and just high level and high class people wearing Nike, it says something about their brand. But did you know that as great of a brand Nike is, it looks like the company's even better? Nike is a company that's highly overlooked by a lot of investors because of its high PE ratio and high valuation that many assume it has. But the stock goes a lot deeper than that. It's actually one of the highest quality businesses, which we'll get into today. So today I'm going to be doing a complete Nike stock analysis. Unfortunately though, the future is a little gray when it comes to Nike because of the Do Dividend Stocks Not Drugs merchandise that's now available, links in the description. It's so good and so comfortable, a lot of people are just burning their Nike clothes. In all seriousness though, it is the perfect gift for any dividend investor or investor in general this coming Christmas. And with all that out of the way, roll the intro.
Hello, I like money.
Nike is a brand that sells shoes, footwear, clothing items. They have iconic brands such as the Nike brand itself, Converse, Chuck Taylor, Jumpman. I think they're most noticeably known for their shoes though. Their shoes are so popular. If you go to any high school, middle school, elementary school, or anywhere across America, I'd be willing to bet over the last 10 or 20 years the most popular shoe there has been Nike's. At least my school it's been at least. Nike is a great company because it has so many price variabilities when it comes to their shoes. Whether it be $50 or $60 shoes or the $350 shoes that will sell out instantly. It really has great variability. They also sell slides and new varieties as well. As I mentioned, Nike is one of the strongest brands in the world. Nike has also proved that during different fashion cycles and different times of fashion that they can stay and have adaptability. This is another huge thing that a lot of people are afraid of when they invest in Nike. They think that fashion trends will change, but Nike has remained through the same for the last 50 years. Nike has a unique way of finding the most popular and comfortable looking shoes. These are often more popular amongst teens and people who really do care about their appearance in public. Me personally, I don't care what people think of me or what I wear, but at the same time, I do own Nike shoes myself as they're very comfortable, they go along well with any outfit, and it's just a way of kind of expressing yourself as fashion is in general. Nike is finding a way to find different niches of people to advertise to. If you play basketball, you'll most likely be buying Nike shoes. If you play football or soccer, you'll most likely be buying Nike cleats. If you don't play any sports, you'll most likely be buying Air Forces. Nike has a product for every niche, and it seems to be so popular in every single one of them. Nike's competition also doesn't seem to be an issue with many other clothing brands coming and going. Nike has shown repeatedly that they can stay. Let's get into Nike's financials and really show why I love them so much financially coming from a company. Currently, Nike is trading at $107.57 per share. They're currently trading at a PE ratio of 33.3. They currently pay a dividend per share of $1.48 and a current dividend yield of 1.38%, which have trended up recently as the stock price has gone down, and they also just increased that dividend nearly 9%. Nike has a price appreciation over the last 5 years sitting near 45%. That doesn't include dividends, which wouldn't mean your total return there. Nike's CEO is John Donahoe II. I want to talk a little bit about my journey with Nike and my portfolio. Nike's a smaller holding right now in my portfolio. Unfortunately, during the bull market in 2021, I bought this stock at nearly its all-time high at $144. I didn't understand anything about valuation whatsoever and just assumed that Nike is a very strong brand, a very strong company, and I've matured a lot since then as an investor. With that said though, even though as I've matured, I realized that Nike's a very strong company, as I'm going to get to in the video. Recently though, last month, I was fortunate enough to pick up some Nike at the $90 range, which I was very happy at, and it's currently at $107 as I mentioned. I'm going to be looking at Nike below 100 for sure. How is Nike's revenue broken down? Well, Nike has 4% of the revenue made up by equipment. This is just miscellaneous stuff like arm sleeves, knee guards, etc. 28% of the revenue is apparel, which is like t-shirts, shorts, etc. And then footwear makes up 68% of the revenue. Footwear is a ridiculously profitable business for them. I say it all the time on the channel. If you have a brand and a company that you could put your logo on a $10 shoe and sell it for $300 and people will buy it instantly and sell it out, that's an amazing business that I want to be part of. Nike just does that. Now, revenue is a very commonly looked at metric when it comes to a lot of newer investors. They just assume that revenue is the money that a company gets, which is technically true. But free cash flow is the ideal metric that you want to look at to see how much a company is really making. Yes, a company can be making $10 in revenue, but if they're spending $9.50 on expenditures and other stuff, they have debt, it's really not meaningful revenue. Nike has very strong revenue growth regardless. They have a 5-year growth rate of 8.05% on it, 10-year growth rate of 8.87% on the revenue. Now, I look at 5 and 10-year growth rates more specifically, as they're going to be smaller, but it's more accurate data. 3-year growth rate for them is much higher, but it's not as accurate, and it's likely not as sustainable as well. So it's another commonly misconstrued thing. It's a green flag if a company's free cash flow looks very similar to the revenue growth, which in Nike's case, it definitely does, regarding the year 2020, which obviously was a fluke year for them. But they have a 5-year growth rate of 5.36% and a 10-year growth rate of the free cash flow of 8.95%, which is very stellar for a company like Nike. Now, this free cash flow is really an indicator of pricing power and just more proof that they have staying power during different fashion cycles. As I mentioned earlier, the 3-year and short-term free cash flow growth rates are really kind of misleading. You can see they have a 51% growth rate, which if this were the case, they'd be trading at like $300 or $400 right now per share. But obviously 2020 happened, so that's going to kind of misconstrue the numbers. But the free cash flow per share has pretty much consistently been growing since 2000, so that's definitely a very positive thing and a green flag in the company overall. Now, we don't want to see companies taking on excessive amounts of debt and having that be a prolonging issue for them. In Nike's case, it's not really. Historically, they've pretty much had no debt. What they've taken on some in some recent years, but it's nothing really to write home about. Nothing that's really catching my eye as a red flag for them. Stock-based compensation is another red flag that eats away from your free cash flow and how much money you really get back as an investor at the end of the day. And in Nike's case, they barely have any stock-based compensation related to their free cash flow. So overall, it all checks out right now. Moving on to Nike's profit margins. Profitability is one of the most important things when looking at a business overall, and the main thing for me is just consistency. Obviously, over time, stuff is going to average out with some businesses like retail, but you just want consistency mainly overall, pretty much just flat from top to bottom. And we can see that's pretty much the case with Nike, and that everything's pretty much in line. There's nothing crazy. They have a gross margin of 44.21%. They have an operating margin of 12.4% and a net margin of 11.21%. This is typically a little higher from where they're at right now, but it's good pricing power and just overall positive thing to see from Nike, so the profits check out. Nike also rewards shareholders very well through dividends and buybacks. Starting off with the buybacks, they've had an impressive share buyback program since 1990. This is very solid to see. Over time, this is just ideally what you want to see. Recently, they bought back 2.55% of shares just this year, indicating that they think shares are potentially at a low price. So that's definitely a positive thing you want to see, especially if you're buying at these current prices. Nike's dividend yield isn't anything crazy, but they have very impressive dividend growth, with recent hikes being the 8 to 11% range. They have a 5-year growth rate of 10.96% on the dividend, a 10-year growth rate of 13.42% on the dividend, and recently actually just increased the dividend just a few days ago, 8.82%, nearly at 9%. This is very solid dividend growth from a company like Nike, and it's a reflection of their free cash flow growth, which is something I always say on the channel. Based off of current financials too, it seems like this dividend growth will be sustainable and safe for now. They have a free cash flow payout ratio of the dividend of 41.3%, and their payout ratio based off of earnings per share is 39.68%, both ranging around that 40% range. This is very sustainable and very strong dividend growth and safety from Nike. At the end of the day, Nike is always knacked for its high valuation. In my opinion, with a company like Nike, it historically trades at a premium for the type of brand that they own, strong financials, and so much more that the stock has to offer that I talked about today. At the end of the day, I think the fair price for them is probably a little lower than what's it at right now, but you're going to need to price in that premium. So for me personally, I'm looking to buy Nike below $100. Nike is also down over 35% from its all-time highs in 2021. Now, I don't really view this as a negative thing. This is nothing that's in their control whatsoever. So overall, I think Nike's an amazing business at the end of the day. I'd consider it an A-tier quality company, and I'm definitely going to look to add to my portfolio under $100 and make it a decent-sized position. I don't know about having it as a core position, but I think going direct to consumer and cutting out the middleman will be big for them. I want to thank you all so much for making the video. If you're wondering what the stock tool that I was using today during the video to look at Nike's financials, look at their stock price, dividend growth, and so much more, it was dividenddata.com. Use my link in the description. I get a portion of the sale. It's a great way to support the channel and get an awesome investment software tool in return. Thank you all for watching. Check out the merchandise link in the description. And of course, do dividend stocks, not drugs. Have a good one.